All right, good morning, trade pros. Welcome to our morning market update for Wednesday, January of the 9th, 2018. This is George from Trade Pro Academy. You can see the screens are off behind me on Victoria's computer. He's not in today. He's back to school. We keep talking about him quitting school and trading. For some reason, he just wants to complete school. Market's not in today as well, so it's just a lonely wolf in the office. But that's all right. We still got a morning market update today. We're going to talk about a few things, why stocks are catching a little bit of a bid and some of the gains in the last 24 hours, and just briefly overview some of Trump's statement and his campaign overview, some of his promises that he pledged from last night's appearance at 9 p.m. All right, so first, let's start with the morning market fun fact. Less than half of Wall Street analysts tracked by a company called FactSet have a buy rating or equivalent on Apple stock, which is the first time that's happened since the start of 2006. All right, so that could mean two things. One is Apple's going to continue to do bad, or because the least amount of analysts have a buy rating, Apple's actually going to go up. And the interesting part about that is that as goes Apple, goes the stock market, because Apple's a huge constituent of most indices and most funds, for that matter, has a big impact on the overall stock market. So very interesting to see that. We're at a very interesting turning point in the stock market overall. Here we either continue to the downside or we continue to claw some upside gains, and we could even start to hit or start to target for some of those highs in 2018. So this is a turning point. We have some key structure and overhead resistance that we're up against, and the next 1 week will be very telling. Today is Wednesday, which is oil inventory day. Tomorrow's Thursday and Friday. The Thursday and Friday before options expiry, which is tomorrow and the day after, tend to be bullish days as the market low forms around those days. All right, so that's where we're at. A lot of this has to do with China. So let's talk about China temporarily here. The United States and China have extended some trade deal talks into an unexpected third day. They had booked the Monday and the Tuesday, but it went on into the Wednesday as well. And that was taken as a positive sign. The two sides are trying to work out a deal, and they've agreed to release a message, quotation, air quotes, a message on Thursday, whatever that means. I think China and the U.S. are going to release some information that's going to be very important. And today, I think the market in the morning just settles down and consolidates. I'm seeing a range day today without very much movement and much volatility for two reasons. Number one, we're pinned up against some resistance, so there's going to be some buying and selling as we consolidate and build out some value or volume around the current area and current prices. Another reason is the Federal Reserve statement's coming up at 2 p.m. today. It's actually the FOMC, Federal Open Market Committee meeting minutes. It's going to be very important to see what Jerome Powell and the gang talked about behind closed doors in light of this new dovish stance from the Federal Reserve. That's coming up at 2 p.m. Eastern today. I don't think it's going to have a ton of volatility around that news event, but it could. It has the potential to be a bombshell. However, 80% of the scenarios end with finding out information that we already know, which is a non-event. So increased volatility slightly, but not by much is the outlook. And we could have some significant moves around 2 p.m. today. So in anticipation of the meeting minutes, in anticipation of the crude oil inventory number at 10:30, and hearing what China and the U.S. have actually come to agreement tomorrow, I think the markets today could just be a little bit slower. So be prepared for that. All right, a little bit of consolidation, never hurt nobody, and it's actually a healthy part of the business and the market. Okay. Some of the sticking points of the U.S. They want China. They want China to purchase some of their farming products and energy commodities, and also larger access to Chinese markets from the U.S. behalf. No progress has been made on the IP, the intellectual property rights, and there's a lot of interesting. I saw a report out of Reuters that I read yesterday that said that Huawei, the massive Chinese tech giant that produces headphones or headsets, phones basically, is in cahoots and has been working closely with Syrian governments and also with Iran. So, the U.S. is not going to like that as that information surfaces. And if we're reading about it, you better believe that government agencies have access to that info already. So that's coming out a little bit more to the surface. That's an interesting topic for later. Markets overall green across the board. In Asia, everything's green. Japan's up 1.1%. Hong Kong's up 2.3%. China up 0.7%. India up 0.6%. In Europe, at midday, London's up 1%, Paris 1.1%, Frankfurt 1 percentage point even. Futures in the U.S., Dow's up 0.3, S&P's up 0.3, Nasdaq's up 0.4 of a percentage point. So you can see gains across the board, with the majority of gains coming in the Asian session. Obviously, that's where the negotiations are happening, and China and Asian markets are getting the biggest boost. They're down the biggest as well. When S&P 500 was out there hitting new all-time highs in 2018 in September, I think it was one of very few people that are out here on the YouTube morning updates telling you guys something's going on in China. Markets are selling off. We're in 10% correction territory. S&P's chugging along like it's ignoring the entire global economy, as if though United States consumes and produces everything that it consumes in the United States, which is not the case. So, anywho, that was really what sparked the issue. China is still the weakest market, and so it's rebounding the strongest, which makes sense on this news. All right, crude oil's up 2.2%, and it's up to about even bigger than that now, gains up into the 51 range. We have some overhead resistance around 52 to 51.80 in crude oil. Interesting to see what happens today with inventory reports. Gold's down 0.3%. Bitcoin's down 0.4 of a percentage point also. All right, today we got a packed economic calendar. At 8:20, we had Fed's Bostic speaking. 9 a.m. at the moment, we have Fed's Evans speaking. All right, 10:30, we have the EIA, or Department of Energy, petroleum inventories or oil inventories. Huge report, very important. In 1 hour of 1 week, you can make your whole weekly income. And on some days of some weeks, we made our whole monthly income in 1 day. Huge opportunity on crude oil. And it's open. They're going to report today, even though the government shut down. The government shutdown's teetering on being one of the longest so far. All right. 1 p.m. we have results of a 24 billion 10-year note auction, and at 2 p.m. we have these FOMC meeting minutes from the Federal Reserve, which is going to be an important event in the afternoon. So essentially, prepare for chop this morning and some sideways action, and prepare for some more volatility in the early afternoon. Could it go differently? Absolutely. Nobody knows where the market's going, and I'm not pretending to either. That's the cold, hard facts, the cold, hard truth. What makes you a good trader is not being able to forecast or predict the move. What makes you a good trader is being able to analyze in real time what is happening and what makes sense at this particular moment, based on order flow, based on sentiment, based on levels, based on a lot of stuff. That's what makes you a good trader. Being able to predict the move has no value at all, because all it takes is one time to be wrong and you could lose a ton of money. So you gaining confidence on the ability to predict is a terrible way to build your trading skill set. Trust me. Tried, tested, and true. All right, Donald Trump last night at 9 p.m. addressed the nation, and he said it's a humanitarian and security crisis on the southern border. I'll tell you this. I started watching it, and I'm not going to lie to you. I got a lot of sleep last night because Donald Trump put me to bed at around 9:08 p.m. I was tired. I just got into the gym, and it just took 8 minutes. Sorry, Donald. I know that you're upset. I didn't watch it. And I know you could tell I was upset. So humanitarian security crisis is what he declared. Demanded billions of dollars in wall funding. That's nothing new. He said it's indirectly paid for via a trade deal with Mexico. That's nothing new. He also said that he repeated a lot of his campaign promises, and he wants the wall. Did not declare a national emergency, though, where he could reallocate money from the Department of Defense, the DOD. And so that didn't happen, which is a market neutral event. Basically, it's a shrug. You know what? None of this matters. In fact, it's a little bit less than a shrug. It's a little bit more bearish than anything, because he didn't declare a national emergency, which means his government shutdown may not be coming to an end very soon. In fact, if we get this government shutdown to last until the end of February, something interesting is going to happen. Fitch is going to downgrade the United States sovereign debt from a AAA lower. They're going to say, look, the government can't secure funding for a budget, then we're going to have to downgrade the rating. And guess what that's going to mean? Maybe a little bit less interest in the U.S. government debt. Although, to be perfectly honest with you, anyone buying government treasuries from the United States, a downgrade is not going to stop them. So there isn't any huge impact, but it's interesting because Fitch has said openly that they're going to make a move on downgrading this debt. And it will have an impact, although it'll be minor. A lot of these things, when you hear about them that sound atrocious, when you actually work through the inner details of how it's going to affect purchases and outflows and inflows, it's not much, right? It's not much, because they're not buying because Fitch says it's a good thing to buy. They're buying because they have nowhere else to put that money, right? Especially people who have U.S. dollars. Dollars are reserve currency, and all these economies that have dollars because they have a trade surplus with the United States have to put them somewhere, right? If you're China and you're getting all these billions of dollars in U.S. cash, what are you going to do? Convert it to the yuan? So you're going to sell dollars, buy the won, then your won's going to appreciate by 40%. And so what they're doing is they have to put that money back in the US. So actually, trade deficit in the United States directly funds the budget and the government of the United States. Very well or very little known fact. And most traders will say, oh, well, let's get them. This deficit is negative. Let's neutralize it out. You neutralize the deficit. Yes, there's less of a trade deficit, but there's more money coming into the treasuries as well to fund the budgets. So it's not crystal clear. Anytime you think you have a solution to a really complex problem, that's, oh yeah, what about this? Be careful, because it's not that simple. If there's one thing the economy isn't, it's simple. So that's that. All right, that's what we got. Donald Trump pretty much said nothing in an hour address to the nation yesterday. There were some things in there. I haven't watched the whole thing, so I can't comment any further, but there was no real announcement. There was no emergency declared, no funding being allocated to the wall. So we know he wants a wall, but so far he ain't getting one because the Democrats have to agree to that. So that's that. Any questions, comments, concerns, and emotional breakdowns, put them in the comment section below. We got to turn around and open up our trading room this morning. This Sunday at 3 p.m. Eastern, we're going to have a live Q&A with myself. The link the link for that video is not in the description yet, but it will be shortly. And also, if you just go to our YouTube channel, live events, you can see it's sitting there. So you could put the comment in the comment section there, the question you want to ask, and I will answer it for you. But first, I'll focus on the people who are there live. So if you could attend live, mark it down this Sunday at 3 p.m. Eastern. I'll answer your questions for just $4 a question. Just kidding, free. Show up. It's free. It's fun. We're going to have a terrific time. It's going to be edge. See you guys then. Take care. I got to turn around and open up trade room. Appreciate y'all. Manage your risk trade like a trade pro. Expect chop, but be prepared for a little bit of upside. Take care. Goodbye. All right, trade pros. Now that we've told YouTube to expect chop, let's get in there and trade. Let's buy. I'm just kidding. YouTube's still on the line. Today is Wednesday, January 9th. The Dow Jones has a 47.6% positive expectancy ratio. The S&P 500's got 57.1. NASDAQ's got 61.9. This isn't indicative of what's definitely going to happen, but these are good stats to know because they run very far back. 61.9% rally or positive expectancy on NASDAQ is what's got my attention. So I'm going to watch NASDAQ closely, some of these technology stocks. If we can get a rally going, it should proceed by NASDAQ taking off. So we're going to watch correlations very closely today. I'm going to give you some levels on the S&P 500. I think the real opportunity is oil. So if I'm going to have to hang tight until 10:30 and have no trades, that's perfectly fine with me because I know oil is going to be a huge opportunity today, considering how much it's already moved. All right, so let me map out some levels for you guys, and then I'll hand it over to our esteemed oil desk to talk to you about some oil levels, and we'll carry through it the rest of the day on the market open.